Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get cut. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. New week. We got Federal Reserve this week, but markets already this morning quite active despite there being a holiday in the UK. At least I should say quite active. I mean, they're moving. I don't know if it's like tons of volume. I'm going to come over here. Oh, it looks like we got even more instruments to roll over today. Well, let us do that real quick. Come over to the volume profile. So we'll start with the Treasury here as usual. And we're getting a push lower overnight to new lows. And the 10-year yield has breached 3.5 again, although they still seem to be having trouble staying below it. And it does look like we're still kind of on a flattener, although nothing too extreme this morning. S&P 500 still struggling, and I think that the FedEx earnings last week, which were just absolutely terrible, right? That seems to be continuing to weigh on sentiment, which is why we're also seeing things like oil just taking a nosedive, right? Gold and silver also struggling here as, well, silver still doesn't look too bad, but I think that that's a trade specific to silver. Copper. Now, I saw this note that the largest copper player, the largest player in the copper market in China, has been saying that they're facing a liquidity crisis. So we might want to keep a close eye on the copper, right? In fact, I'll come over here. Here's my copper chart. I'll make sure that I keep that one up. And then let's come over to the Bitcoins. Oh boy. Oh boy. Well, I'm not 100% sure if that's new lows for the year or not. We're getting to the point where I have to go so far back. I think that we still need to like get below 1800 to say that like we're into the really bad levels. But that little sell here this morning doesn't look good, and man, the Ethereum merge is causing all sorts of chaos in the cryptocurrency market because all of the miners, have to move to different coins, and it doesn't matter what they moved to, it isn't profitable. And so they're just selling off everything that they can to try and get some money. And then over here in the dollar continues to be quite resilient. Not as high as it was last Friday, but it's still up there, and we're still in the 109 area. It's not coming back. I thought, man, $100 index at 100 is super high. That can't last. Well, it's been like that like all summer now, right? And I think that the high dollar will continue to be a problem. I'm very concerned. Of course, this probably isn't going to be something that happens this week, but maybe like a month from now. I think that we might see coordinated currency intervention. I really do. Because the dollar is just too strong and it's becoming a real problem for the market. Well, for us here in the treasuries, so a couple of other things we got going on. I remember last week saying that we had like blackout period for stocks, and I think I said it like, oh, the blackout period ends, and that's not true. In fact, I think it's really that next week there are more blackout periods. So there's not like a set blackout period for stock buybacks, but most companies block stock buybacks around earnings. And since we're coming up into earnings again, that's why you're going to get that. So it's not going to be like a straight on or off thing, but you may notice less flows in stocks this week because of that. But we have the Federal Reserve and everything else like that. So that's probably going to be the key driver of action this week. We also have CTAs seem to be flipping. So it looks like the easy trade is probably short ES, but I don't know. Here in the treasuries, certainly they are selling off in anticipation that the Federal Reserve will raise interest rates and will continue to be aggressive. But here, as soon as we've started the regular session, they've been moving back up. So I think that this is another situation. As always, I mean, it's always the case that you want to be really selective about where you pick until you don't, right? Until it gets really crazy. But I don't want to sell into '08. Oh, we'll see how it goes. Okay, Yesin asks, I traded Forex spot for 1 year and I'm interested in futures markets. Where is the best formation or course to learn? Well, so I don't know what you mean by the best formation, but I have a lot of education here on this channel, especially if you're starting out. So I have a more recent video about getting started with trading futures where I show you an app that's really easy to get into and is good to start with. Then I have a whole series on order flow and all of these other things that you can take advantage of in the futures market. We also talk a lot about the informational inefficiency of market and that the market is more statistically efficient than uh, informationally efficient, which kind of suggests that you don't necessarily want to look for chart patterns. I mean, it's possible, although extremely unlikely, that you'll find a chart pattern that works. It's better to know what's going on. So you notice I was just talking there about here are some flows that we expect to see this week. And one of the flows that's probably going to be missing is stock buybacks, right? So that kind of helps us determine which way we're going to be going. And that's how we determine those things. Do you know of a way to check the quality of times and sales data? I don't know. What was the rest of it you were saying? Oh, you purchased 4 years from AlloSeek. In 2021, one of the years that the market saw a significant increase, our backtest did poorly, and this is leading me to think that my signal isn't that good, or two, that there is something wrong with the 2021 year. Um, that's a really interesting question. I mean, so kind of depends on what your strategy is doing, right? Why are the treasuries slow today? Well, so I'm sorry, I'll get back to you here in a second, guess. Another flow that I kind of only glossed over, but is really important, is that they're doing the Queen's funeral. So the UK is closed. That's why you're not seeing as much activity right now. At least like volume wise. Like it's still moving. Like that's the kind of the scary thing is it's moving on very little volume. But the European traders are not there. The UK guys are on vacation. Yeah, I've actually got a number of Arabic speakers and people more from the Middle East. I know I was thinking about this morning. It's kind of weird. I'm realizing that for my VODs, my audience is largely from the United States, but for the morning live stream, that's not the case. Not very many Americans wake up this early. Only the dedicated futures traders do. Anyways, okay, so I don't know of any way to like check the quality of the times and sales data. I think that I would probably assume that their data is correct. It doesn't surprise me that you would see very different behavior in your algorithm in 2021 versus other years, right? Because 2020, especially if you were trading like S&P 500 futures, especially if you were trading like treasuries, because uh, the markets were different in 2021 from any other year, right? So what I would be doing is I would very much put like sanity checks in your code, right? So I would be, here is how the algorithm is supposed to behave in these different situations. and go through the code. And if you find a time period where the algorithm isn't doing very well, like narrow in on that area and like watch the algorithm step through it and see what it's doing, right? Can you elaborate on these differences? Well, just 2021 was a market that was dominated by massive liquidity being injected into the markets. So you had a situation where retail traders and people speculating in the markets overall did overwhelmingly well, whereas if you were kind of standing in the way of that, if you were kind of doing market making and trying to trade against that, you'd probably get, you know, stopped out over and over and over again. Like there's just like much more trending action in 2021 than other time periods. And I've found in my own back testing that, you know, the algorithms perform differently post 2020 than they do pre 2020. The whole thing is when we're talking about a statistical inefficiency, is that markets change over time. So it can be possible that you have a strategy that does work and then something changes. Some major player that was causing that pattern to happen disappears, or, something like that. Seth, you're pretty well known in my country within the trading community. Really? Sometimes, you know what? Like, sometimes I really wonder. Um, yeah, so anytime that there's like a thread on Reddit, well, I think I know what's going on, but so like anytime there's a thread on Reddit or there's a thread on the forums about, hey, who are some people on YouTube that you can go and watch, you know, I never get mentioned. I never get mentioned. And you know what I think it is? I think that my viewers don't hang out in those places. Like, yeah, I used to browse like every thread on the Reddit forum, like every day. I would go through and I would visit and read every thread. You know that? In the hopes that I would come across like edges and things like that. And, I eventually became very disillusioned and burnt out on that because it was just like everything that ever got posted there was from naive people. You know what I mean? And I do feel, or I'd like to think at least, that my audience is a little bit smarter than your average trader. That doesn't mean that they all do well. I think that trading is still really hard, regardless of how good you are at it. But yeah, I think that a lot of you guys kind of realize that all that stuff is just noise and kind of ignore it. Yeah. So I saw this thread on Reddit yesterday. It's a really interesting thread to read. And this guy, oh, really? You got a, wait, it's Jack. Jack. I'm not sure. Oh, like Jack from Discord? Are you gonna be in Goldman in summer 2023? Then we have to hang out, bro. Oh, dude, wow. That's super cool. What group are you gonna be working for? I'm so happy for you, man. It's and Salt Lake is a great place to intern too. And interning there is, wow. Interning there, like if you intern there and you do well, whew. You know what I could use to track liquidity or things that could indicate these more long-term changes? Oh, that's a good question. Well, I mean the first big one. So here's two metrics that I kind of look at in my algorithms, or that I've tried looking at in my algorithms that I've found tends to work well. Okay. One is you want some sort of indication of range. So the daily ATR is like a really good one. Like daily ATR adjusted for percent instead of points, right? So the daily percentage ATR of your instrument seems to be a very effective indication of, I mean, it's not a complete indication, but it kind of gets the job done roughly from a liquidity perspective, right? Because the higher your range is, the less liquidity there is in the market, generally speaking, right? And then I also like to have some sort of indication of trend. So for me, I've used R squared. R squared is the metric that I've found works the best. Um, and you can do that both from a daily perspective or from like on your intraday chart. But if I'm doing a market making algorithm and the market has been very, very trendy that day, then I don't want it to trade, right? So those are two things. I There are other things though, like man, the thing that I struggle with the most from like trying to quantify things is latent liquidity. So like you'll come in, what you see right here is not a true representation of the liquidity. Traders have an incentive to not show their liquidity and to only put it in once price gets there. So how much actually trades compared to how much was there varies wildly. And I can see like I can go and I can do a one range chart and I can look at every step how much volume had to go through for this step, right? And that could be like one indication of resting liquidity, but I can just kind of see it where it's like, well, this time it took 5,000 contracts and now this time it only took 200 contracts to make it tick. And I don't know how you put that into some sort of a long-term metric that you could really like trade off of, you know? Oh man, so I have this sticky notes and um I don't know where it comes from, but like they'll get like grease on them. I don't know if you can see the grease in the corner there. Like what causes that? What causes that? Am I just really greasy and I don't realize it? It drives me crazy. So there's a lot of things that I can see in the market that I'm almost certain that anything I see from like a technical perspective can be quantified in some way. Is just like I lack the mathematical knowledge to do it. Operate. Well, you're right. I mean I assumed that it would be operations, but like do you can you go deeper than that? Yeah. One of the things that has really helped me is like I come in and I say, yeah, I want to have a informational advantage of some sort. I know something about the flows that tells me that it's going to go a certain direction today. So I like right now, I think that I would much prefer to go short, but because we were short through most of the overnight, I'm kind of a little bit skeptical about their ability to keep that up. And so I think I would really need to see something significant happen for me to flip, right? And but then that kind of is hard to do because you're just going to sit here and wait for something on the new squawk to happen, right? But then I realized, well, but the liquidity matters too. Like I need to know what the current liquidity conditions are so that when an opportunity comes, I know how to handle it. Because if we had already kind of exhausted liquidity in a location, or we had already had a strong trend up on low volume in a location, it kind of suggests that you're going to come back the other way really, really hard, right? So you have to keep an eye on the liquidity. And surely there is a way to quantify what it is that I see, but I don't know how to do it. And to be honest, sometimes I'm not sure I completely understand how I see what I see. But there's something there. It's like there's some sort of hidden Markov model with how the liquidity works that you can tease out of it that the human mind can see, but that I don't know how to express mathematically. Historically, today is the worst trading day of the year. Well, I know that like from a date perspective it would be, but I don't know. The question that I would be asking is, when you test historically, are you testing the Monday before September FOMC meeting? Because that's what you would really want to test, right? Where would you get the data for the Markov process? Well, I've been saving the data myself. So for the 10-year treasury, every update that comes into that instrument, I'm saving off to a raw file, so with the like the full um uncoordinated data. Is that the word that I'm looking for? Like I'm not like grouping them together by time period or anything. It's just every individual update. And at some point, I'll go through and I will make some processes that use that data and turn it back, do the processing that NinjaTrader does on it. but preferably in something that can maybe take advantage of my graphics card. Okay, what about the footprint chart do you use? I saw a lot of futures traders using and kind of new to okay, so footprint charts are really good. Um it, I mean, so again, it's a similar thing that order flow is just realize order flow is only part of a complete strategy. Okay. And I would treat a footprint chart the same way that I do the DOM. Okay. It's the same thing. It's just you're seeing how many market orders it took, came through at that price, buy and sell. And that's what the footprint chart is showing you. A lot of people will use footprint charts and say things like, okay, um, this was an unfinished auction. So the way that they say that is like, you see here at 16 half, it ticked up at 16 half, and nobody ever traded into 17. And then it got pushed back down. So they kind of view that as like that trend being short circuited. Whereas in this one, only 3 went into 130, 31, and then they were never able to clear that price. And so they considered that one a finished auction. So their theory is that price is extremely likely to come back into an unfinished auction. I think that that's a fallacy. So I think that the reason why you see the markets come back to a quote unfinished auction often is just because volatility tends to cluster and remain constant. And so if you've seen a price visited once today, it's very likely that you'll see the price visited again because it's going to be in that area. The volatility is just going to keep it in that area, right? So what I'm saying is that there are a lot of like technical setups that people are going to teach you with footprint charts that from everything that I can see, um, doesn't really work, right? What am I doing with the order flow? I'm trying to judge what the current liquidity conditions are. I'm trying to understand why the instrument moved where it did. I'm trying to, if there's a move, I'm trying to correlate it to a piece of news or a particular order flow that I think might be moving in that manner, right? And you can do those with footprint charts too. And the advantage of the footprint chart is that it's able to give you a higher level view, which especially in the equity indexes can be really useful, right? But just be careful about people selling setups to you, right? Unless the setup is news came out and here's how you play it, right? Okay, what do you do about missing data? I guess I just deal with it. I don't think that I've missed a day yet. But from my perspective, like a day is a day. And I'm kind of running this stuff against, like what I'm going to be doing is like running it against one day, maybe 1 week, and do like the learning on that and then try and run it on like a really huge data set. So, but I don't plan on doing anything like, oh, the way that this trades should be different on Monday or Wednesday or based on this day of the month or any of that sort of stuff. I'm trying to tease out in empirical Should I put it that way? Yeah, I'm trying to tease out some sort of empirical behavior in how the level 2 actually behaves. In particular, these things like if there's an imbalance between the overall buys and the overall sells, does that make a difference? And there's a couple of other things that I've found are really useful, but like I really need the data to go and, like I said, like a Markov model. I think that there's a Markov model in how the liquidity stacks. And in order to really test that appropriately, I need basically historical depth of market. So that's why I've been saving it. But I haven't gotten around to doing that because I got like all these other things are in front of it first. I was just like, okay, we can put this on the back burner and just collect data. I had been focused on putting the indicators together for you guys. I did an update package for that last video that was about DX feed. And I kind of, there was a couple of indicators that I had made in the last year that I never put in there. So I added those in there and did a bunch of cleanup on those. And I also put together a free package. I also put together a free package for you guys that you can get from signing up for a mailing list. So I kind of focused on that. Now the next thing is that I need to document the new indicators. I haven't done that yet. So Dee was pointing that out to me. He was like, "Oh, I don't know. Like, what did you add? How do you use them?" So I need to write the documentation for that. And then I'm trying to focus a lot more on trying to complete the Series 65. So I took the practice test this weekend and I got like 65%. So I suppose I'm okay. I'm close. I think that at the beginning of the test that I wasn't, I don't know, like I guess I hadn't taken a test in a long time because I kept confusing myself and getting tricked and stuff. Part of it is also probably that the test, they put like the hardest questions on their practice tests. But I think I'm going to try and take that one test over again to make sure I understood, I learned correctly. So I got that in this book. I want to get out of the way. Then I can get more into machine learning and then I can do all that stuff. We get to, it's a Series 65, which is basically the test that you need to be an investment advisor representative. So if I took that test and then I don't know if I got hired by somebody, then I could put on YouTube that I'm an investment advisor representative. But at this point, it's turned into I've spent so much time on it. I don't know if I'm like it's going to change anything for me, but I want to prove to myself that I can do it. That I can study for the test and take it. So I want to try and take it like end of October maybe. So I got like 9 practice tests to do. So I got to study hard. Been a little bit too sparse on this study. And I don't think I can take the practice test every day, but I can probably take it like on Tuesdays. Oh, I used stcusa.com. What is that? Securities Trading Securities Trading Corporation. That's what they're called. Why did I use them? Because when I worked for Goldman Sachs, that's what Goldman Sachs used. Oh, what was the cost? That one was only like $300, I think, for the materials. $300. That one's pretty cheap. You get into some of their other ones, like their bigger ones, like the Series 7, for instance, you're talking like $1,000. But this one was small. The thing was I thought, oh, okay, I can do this one. It looks like it's smaller, it's cheaper, and it will be useful for the stream anyways. It's kind of what it's turned out is I already knew everything in it. They had already taught me almost everything in there working at Goldman. And man, and it's mostly like really, really knowing the tiny little details really, really well, which I'm not to yet. I don't think I could, that's why I need to study really hard. But it's been fun still. But after that one, I really want to do series 3. It really makes me wonder what is in series 3. I can't imagine. Am I going to learn a ton of stuff about the futures trading industry that I'm going to be like, oh, how did we not know this stuff? You know, you know what? It looks like the 10-year has kind of gotten itself stuck in a rut, but I'm noticing some flattening between the 5 and 30 again. Anyways, thinking back to Gus's issues, like the first thing that I would be what I would probably do. So like say you got something that works really, really well. Let's just say that you have something that works really, really well. You have some reason to believe that it's taking advantage of like a um something in the market microstructure, for instance, right? But there are periods where it performs really well and where it doesn't perform very well. What I would do is I would just kind of take note of that algorithm, right? And kind of set it down and build another one and try and build one that would do well in that 2021 time period, right? And then later on, you can create an algorithm that switches between them. So you can create these machine learning algorithms that keep track of the performance of all of the algorithms and switches them on and off dynamically. So the machine would realize, oh, this time period right now in 2021 doesn't work very well, so we don't use this algorithm, even though it might not completely understand why it happens. That's what I would do. Now, for the math for the Markov process, there's actually quite a bit of information online about this, and if I was doing it in Python, there's stuff that kind of already has it available, and I can just plug and play. So I think what I'm going to do is I'm going to get that all into Python, and I'm going to do it in Python, and then the struggle will be um, bridging the live data, because this basically is going to be something that's like training on past data, but then we also want to start including the live data. And how do you do that? There's ways to do it, but it's going to be interesting. That's kind of one of the fuzzier areas of machine learning where there's lots of different ways to do it, right? You're the man. Well, thanks. Algorithmic trading is really hard, Gus. Just remember that, right? Like really? Well, it's these people over in MetaTrader selling algorithms that really tricked everybody, I think. But you know, yeah, there's been people in the markets that have made a lot of money from algorithms like Renaissance Trading. But we got to remember that Renaissance Trading is thousands of people and huge infrastructure and stuff, right? Somehow we sold this idea that algorithmic trading was easier than discretionary trading because the human is too much of a wild card factor. We need to eliminate them, right? I think the reality is that algorithmic trading is significantly harder. The amount that you have to learn and the amount of work that you have to put in to actually find something is just insane. It's just insane sometimes. So, I never went back and see there was anything on Twitter. Let's see here. Where's Brannigan Barrett tweeting something? Not much happening. UK holiday today. 2 years seems to be taking a breath, but not sure upside move is done yet. 10-year yields made new yearly high today, which is interesting. There's some chatter we may see some profit taking into the FOMC meeting, given now market pricing strong. Um, a 30% chance of a 100 basis point hike. I think if the Fed was going to do 100, they would have signaled it to the markets in the same way they did in June. Yeah. Fact that they haven't signaled it suggests a relief rally into Wednesday's announcement. There's also chatter of Fed signaling they're done front loading at this meeting, which, if it occurs, will send markets bid as a peak price in peak Fed, etc. It will also likely put top in dollars, as other central banks are now all starting the front load process. So some interesting themes developing. Bitcoin down 5% today, which has been the best proxy all year, and I suspect should weigh on risk today. Any fast drop at the start of the week should be decent fade given the profit taking theme. Otherwise, it's about back to end of week. Yeah. I'm a really weary about trying to run with strong momentum here, because I think that the way that the market is right now, that moves are going to be somewhat measured. The step from filtering market conditions and really automating your trades is the hardest part for me. Yeah, well, like the thing is you have like a bunch of different algorithms, but then like you combine them together and switch between them. Does it work? But kind of what I found with my order flow indicators, and the reason why I haven't done a whole lot with them recently since the start of this year, was that you just need a lot of data. It wasn't practical for me to change the algorithm and then see how it worked the next day. Wasn't practical. So, well, it does look like they're heading on the way up, and there was a 1200, so I'm kind of wondering if there is some sort of a market, sorry, a block trade going on here, pushing us up. Like they said before, profit taking. Probably if I was to have taken that trade, I would have wanted to be long at 15 a long time ago, right? So, no reason for me to get too excited. I can just continue to keep an eye on it here. Now, I've also been thinking, because we need some new videos. Well, there was that one video that I was going to make that I kind of forgot about, and that was a newer workspace walkthrough. So maybe I should do that next week. In fact, I think I might record it in the middle of the week, because you want to be able to do it when there's like stuff on the DOM, right? So I should put that together too. Do that, and then I think I want to do one for the problem with price action, and then maybe I can do one that's a little bit more macroeconomics. Recently, what was the book that you read? Hmm. I hear the Black Book of Financial Hacking. I immediately start thinking black box. There's this really popular book called Black Box Trading or something like that, which I haven't read, but everything that I know about black box and everything says to me like the that's a approach to trading that would lead you to erroneous trades. But that must not be what the one that you're talking about is about. Another thing is that's going on here is that I need to be a little bit cautious about getting into something, because I'm probably going to be My gut hasn't been doing super great. It's been like that for a couple of weeks now, but like I ate a bunch of kimchi last night, so that's probably gonna that's probably gonna upset the intestinal balance, you know? Okay, so this move up that we're getting, I am this rise out of the mm, so they went sideways around 15.5 for a long time. They came up. The treasury is coming back really quickly, but the Japanese yen was also breaking out to the upside with that. So sent you some results. Yeah, let's look at what you have with it so far. Cumulative log return by fold. That looks pretty good. Huh. Those are interesting metrics. I've never seen anybody use those metrics. So here's what you should do. Um, there's something called a probabilistic Sharpe ratio. Find out what the probabilistic Sharpe ratio of the strategy is. That's I think your best metric. I haven't tried it myself, but from what I've read about it, that would probably be like your best metric. The Bank for International Settlements says the likelihood of a recession has risen. Thanks. That was probably a headline like 3 weeks late, but so when you say like until 99.35, is that like you're cutting out like the biggest outliers or something like that? Hmm. That's because you're printing results. So you're saying like if you take 1,000 trades, you print every 1% of results. That means that you print results every 10 trades or something like that? Don't understand. 15 GOP senators signal opposition to Graham's abortion ban. What the hell is Lindsey Graham doing, by the way? I'm kind of wondering about Lindsey. Can I just wonder aloud here, politics really quick, since that came up? Why would you want to be trying to push an abortion ban through Congress right ahead of the midterms? You freaking idiot. Maybe Lindsey Graham really is trying to undermine the GOP. I just come on. Is he really that stupid? Well, whatever. What's this? It's important to act in a timely and forceful way, the head of the BIS Monetary and Economic Department, Claudio Borio, says. Front loading of hikes tends to reduce the likelihood of a hard landing. Switzerland based BIS quarterly report acknowledges that both recession and debt risks were rising, but said that bringing soaring global inflation back down remained paramount. We're doing 50-50 calibration and testing. The percentage is how much of the database the algo is validated. I see. But you're not showing the P&L like trade by trade, which is what I'm used to. Because what I was expecting to see was like, here was what it was in January, and here's what, going by month, and then seeing, okay, what time periods did it perform well in and not perform well in, and what do we know about the markets at those times that would kind of suggest to us what the algorithm is doing, is what I'm thinking, right? So when you say that it didn't do well in 2021, because it's actually the case for most people are going to see their algorithm do really, really well in 2021. That's why I said you must be trying to trade, you must be trying to put in limit orders and trade against the trend or something. Because if you were using a model that was based more on trend action, probably going to do well in 2021. And then, like, not so well in 2022. So, like I said, did I get into this? And I think I got distracted. But on Reddit, there was this thread the other day where this guy said, "Oh, I was such a good trader, and then something happened in my life, and I've lost my mental edge," is what he said. And there was some people like buried down at the bottom, but I think that they're right. They're saying, well, you said that you had 2 years worth of profits, and you got those 2 years worth of profits in like the biggest injection of monetary stimulus ever. So it's a pretty good chance that you were just lucky and that there's no edge to what you were doing, and that it has absolutely nothing to do with your lack of mental toughness or whatever traumatic thing happened to you, but it's really more a function of just the market changed and what you were doing doesn't work anymore now that everything is going down. And I think it was true because, for one thing, he was trading Bitcoin. He was trading Bitcoin and he was making like 5K a day. My trauma. He was trading Bitcoin and making 5K a day, right? So, yeah, if you went through all that time period and then until now, from 2020 until 2022, you probably did okay in Bitcoin until it really started plummeting and everybody in Bitcoin starts getting hammered, right? But then he was like, well, but I have 2 years. And he put that up as like, he was very kind of haughty about it. Is that the word? What is the definition of haughty exactly? I'm using a word and I'm not arrogantly superior and disdainful. Yes, he was haughty about it. HAUGHTY. And he was all haughty. I have 2 years worth of success. And I'm like, wow, that's why the industry standard is 5 years. Because people do what you're doing by taking on excessive risk and getting lucky all the time. All the time. That's why you need to look at 5 years. Unfortunately, Gus has 4 years. That you take the best that you get, right? Gonna have to get more data and check if the 2021 period happened in the last 10 years. Yeah, what instrument are you doing it on, by the way, Gus? Okay, you're using MES. That's what I was afraid of. Because MES has only been around for so long, right? Are you only using MES as your input? That would be interesting. If MES is your only input, yeah. So you got the data as far back as it'll go. Makes sense. Makes sense. I think that'll be good. In what form does the data come in? And how big is it? Because my data, it's about a few megs a day. You can get ES for 900? Ooh, that's kind of steep. That seems steep to me. Can I really save this stuff up every day for like 5 years and then sell it to people for $1,000? 10 years. Well, 10 years. Wow. Yeah. Because so like here's the thing that I've always kind of done and where I've gone on that particular journey. So like when I started doing this in basically 2016, 2017. right? Um, when I started trading, it was like just before the 2016 election. And then, but I wasn't too serious. I wasn't too deep into it yet. And then by 2017 was when we started the stream. It's kind of funny to look back on because, people immediately started holding me out as an expert. And I was kind of like, well, I've only been doing this for like a year. I'm not that big of an expert. But then it turned out I knew so much more about the markets than most people did. So actually it was much further along than I knew. It's just there was some really, really key discoveries, not discoveries, realizations, in particular that the market is more statistically efficient than it is informationally efficient, and that the market isn't very informationally efficient at all, and that orders move markets. Those are really, really, really help you understand where you should put your effort. And it took me way too late to understand that. So like, I traded until 2020 was about when I really started to say like any form of technical analysis I need to eliminate from my trading. And then it took me a year or two to kind of get a hang of that and adjust to that. And now I got to where I've been this year, where that coupled with a lot of moves in the treasuries have given me, I've done really well lately. But what'll always happen when I'm doing my back testing is it'll always be like, well, okay, but this particular year was weird, right? I'm back testing, but this particular time period was weird, right? And that time keeps getting moved. So like it used to be, well, you need to make sure that you see how you did in 2018, because in 2018 we had at 2018 and 2019, the beginning of 2019, we had a trade war, and the Federal Reserve had to reverse on interest rates, right? And I found that my strategies all performed differently in those years, right? And then we came to 2020. It was like every time that one of those events would come along, then I'm like, you want to make sure that you include that in your backtest, see how it does in the poor times. And then 2020 came along and just screwed up all of the algorithms. I think that this is why you're starting to see more people come to the conclusion that I have. So like if you go to the algorithmic trading subreddit, the retail traders are all just really down. The sentiment among the retail traders for the algorithmic trading subreddits isn't very high, unless they're like brand new. Like there's people that do this for a living and they come in and they'll give you hints and they'll say useful stuff. But pretty much everybody in there is like, I try everything and I'm not making money, is what they say. And uh, I think that a lot more of them are starting to realize that, like, oh yeah, technical analysis doesn't really work very well. And that these quants at the firms that making these algorithms everybody talks about, they're not really doing technical analysis. That they're doing like pairs trading, for instance. Okay, you got another one with the chart underneath of it. Okay. That's a really big. Oh no, wait, I'm not. Oh, okay. Yeah. I can see here, like it was doing really well until 2021, and then you had these. The backtest is still running. See, the thing that I can't see from these metrics to kind of like is we need to see things like maximum drawdown percentage is like a really, really important one, right? Because that tells you how much you could. Well, so if you were like really doing some like working for a firm or something like that, then what they'll do is they'll say, okay, so like if your maximum drawdown is 10%, then that's how much leverage we can use on it, essentially is what that means. I wouldn't trade it that way, the small account, but I'm just pointing out how it goes. But the drawdown percentage is one of the most useful metrics, right? You gotta see drawdown percentage and Sharpe ratio to see if there's really something in those base stats that's really enough of an outlier that you like really want to continue going, that there's really something to it, right? Now you said database, so what are you storing the data in? It's about 600 megabytes a year. You're actually using 0% TA. Huh. Well, now I'm interested. So is it like a pair? Well, but if you only have the data for the MES, then I guess it wouldn't be a pairs trading thing. So then is it you're trying to take advantage of something in the order flow, like you're finding a spot where the MES is gapping and trying to come in and try and take advantage of the spread between them or something like that. So it seems like that's something that could work. When you consider that I've caught like 10 ticks of slippage in MES at one point, back in like 2019 or whenever that was, then yeah, there's probably is some room for you to make money market making in MES. There's room to make money market making in the 5-year if you're big enough to hedge it. Yeah, we can chat on Discord later. You don't necessarily have to tell me. I'm interested to know, but it would probably be like, I'd be like, oh, I want to go and check this now. But I don't really have time for that. Got to focus on that test, man. Probably, I need to start taking days off. So probably I should take some days off on work and to study. I could probably do that once because I think I have enough vacation days to take like one day off each week. Just not work Fridays anymore. And the thing is, I didn't even tell you, I worked on the table. I worked on the table this weekend. Like we got a lot more done, and we squared the table up, and we started flattening the top of it, which was a lot of work. Leaf floating on a lake. Welcome back. How are you doing? Anyways, it's really flat now though. I don't think that it's cherry. I think it's walnut. I got so much. I didn't have a mask on at first, and so I think you're breathing a lot of sawdust and stuff. But it was a long time working on it. That was like all Saturday afternoon and evening. Was what I did. But I tell you what, when I get the desk, well, you won't be able to see it because you can't see it in this. Maybe I need to change that. Oh man, you'll be able to see it in the videos though, probably. It's going to be a really nice looking desk, I have to say. When we get done with this, it's going to be like crazy. They're coming back down now behind the treasury, huh? 5-year is already back down to its lows. And how? Well, that's interesting because the cumulative delta isn't really changing, at least not in the other instruments. It is in the 5-year. It is in the 5-year. I'm not really seeing a change in the 6J. So if I had stuck to things and saying I want to take a short, I might have tried taking that one. That would have been the one. But I think that it would have been a little too on the edge, But I do need to pay attention, right? Happy Monday. Oh, don't call it that. It's just Monday. It's just Monday. It's easier to find an edge with data analysis than technical analysis. Oh. Okay, so technical analysis, the problem with technical analysis is that a lot of their beliefs about the markets are just plain wrong. Is kind of what I've started. So that's the thing that I hope I hit on in the price action. Man, I don't know. This is going to be a tough video. I'm hoping that me coming out and being pretty brazen about that price action is not working, that it's to your detriment, is going to convince those people that are really into price action to stick around for the whole video and watch the whole thing, right? So hopefully that helps. But I'm a little afraid that they'll kind of miss some of the bigger points. So like I started out, like one of the things that I really hate about price action is that it's not really a real system. From two perspectives. First of all, there is not a solid definition of what price action is. There's a lot of different systems, but the way that all of these systems um, do price action are all wildly different. Like there are some people that pay attention to um, candlestick patterns, and there are some people that only look at support and resistance, for instance, right? Because there's not like an underlying theory about how the market works to price. So like for volume profile, they adhere to the market auction theory, right? Which is that a market will auction in one direction. It's a two-way auction, and it will go in one direction until that's the highest price that people at that time are willing to pay, and then it will go and it will test the other direction. And so they have this idea of here is a balance area, and then there's going to be a measured move up, and then that measured move up is either going to be accepted or rejected. Okay, well, it's wrong. There's some things about that theory that are wrong, but at least it's a unified theory, right? Does price action have a unified theory like that? No. The price action is really defined more by these traders kind of have sharing a set of like trading strategy approaches rather than like a key underlying theory, right? So they all prefer to they're using charts, but they're relying like on something to do with the most recent bar. It has to, they don't want indicators like an RSI or something because that's lagging data. Okay, so here's the S&P 500 starting. I'm glad that we have that sound now. Anyways, so they kind of, you're right, price action traders, they like support and resistance, for instance, right? And that's kind of what defines them, but there's not like a key underlying theory, right? Well, I'm afraid that the price action traders will kind of say that I'm contradicting myself by saying, well, there's not a key definition, it's not a real strategy, but then you are still grouping them all together under price action. Well, I guess if there is a shared belief amongst them, it's that they believe that the movement of price matters and can be used to analyze and predict price, is really what it all comes down to, which is no evidence supporting that, right? The other way in which it's not a real strategy is that the systems that they give you, they don't give you setups. They give you a bunch of heuristics. Like, if you're looking to trade support and resistance, don't trade it on the first touch of the price. For instance, these are the sorts of heuristics that they give you, right? But then they'll say, but sometimes you do, and sometimes you don't. So none of the rules are like hard rules. And when you really look at the system together with all of the different rules that they give you, it basically means that you can take whatever trade you want. So you can't take two traders and look at them and say that they're objectively doing the same thing. I think that with the way that I trade that, I think that you could. I think that actually you could. We should be able to come in and come to the same conclusion about what the liquidity conditions are, and we should be able to come to the same conclusion about what the future flows are, um, and the price and how we pick the trade might be a little bit different, but like the overall theory and signal and everything could be the same, right? Whereas price action, how are you supposed to say this trade was a good trade and this trade was a bad trade? You'd never be able to do that until afterwards and see if it made money or didn't make money, right? So it's not a real strategy because it's not specific enough that you can actually test it. You can't actually backtest price action. It's constructed in a way to make it impossible to backtest, because if you could just backtest it, they would immediately know, they would immediately realize that it doesn't really work very well, right? So what I really want the price action traders to understand is that there are things that we know about the market that really suggest that their ideas about the market are wrong. The inelastic theory of markets in particular, I think, really suggests that the support and resistance approach to trading is wrong, right? That large traders don't really like sit there on the edge and are waiting to trade against you necessarily. They might have prices where they decide to get involved, but really what happens is they make they know that price is inefficient, and they're just trying to get the price that they can get now because they have some future flow that they know is going to come through, right? And when you get a range where there's key support and resistance, that really what that suggests is that nobody's really involved in that market at the time, right? So the inelastic theory of markets, I think, is a direct strike at support and resistance in particular, and that what we know about how what leads to the statistical efficiency of markets kind of suggests that all of the things that the price action traders use are unlikely to be very effective in the long run, right? That's the key thing that we want them to talk about, and that's what I hope that they end up arguing about. But I don't think that they're going to. I think that they're going to argue that, like, well, you weren't really fair about what price action was. You can say you don't really understand price action. So then you go in this circle where it's like, okay, so give me something that I can backtest and prove actually works or doesn't work. And they won't be able to do that, right? I'm kind of in that mood though, where that's kind of where my mind is I want to be combative again. I've done well past little while not being too combative, right? Device, it doesn't matter if there's an important volume profile point or if I draw a support and resistance line, mostly it won't work. Yeah. Anyways, so what had gotten me started on all of that is that, like, it really there's there's technical analysis and there's quantitative analysis, right? But I think the thing that kills you is the belief that you can use the past market generated data to predict the future. That's the key. That's, to me, technical analysis. That's the key theme behind all of these approaches to trading that really leads to people's detriment, or that is to people's detriment. Yeah, it's both sad and amazing how so many people get sucked into these circular thought processes concerning finance. It's like a psyop. It's like the most flawed part of the male psyche gets preyed upon. It is. Well, it's not the. I don't know if it's anything to do with the male psyche. So what will get you with the male psyche is the I've got to go in and go hard, right? When I think about the male psyche, that's the key thing is risk taking. So, but it's the most flawed part of the human psyche, right? The human mind is designed to see normal distributions, to see that most of the time when this thing happens, it's likely to predict this thing, like with the weather. Like if you know, we can see El Nino and El Nina, that when the waters in a certain part of the world tends to be hotter or cooler, that tends to result in more or less rain in other parts of the world, right? And we can see those distributions really quickly, right? But what the human psyche is not very good at is seeing a fat tail distribution. And why is that? Because the fat tail distribution, you have to have a lot of data points to be able to see. And the human brain can't handle more than like 200 data points, can't remember more than 200 individual things of something. You know, like people, your brain can't really handle more than 200 people, right? And so that's the most flawed part of the human mind as it pertains to trading that people are taking advantage of over and over and over again. What's the solution to this? The solution to this should be if retail traders were taught that you should have a back test containing 10,000 trades over 5 years worth of data before you claim that a system is profitable, it would be a completely different world, right? If every time that somebody got on the subreddit and they only showed 1 month of data, they got laughed out of the subreddit, world would be different. There'd be a lot less retail traders, frankly. There'd be a lot less retail traders, frankly. And we are trained to search for patterns which are not existing in TA. Well, listen, patterns exist. The problem is predictive patterns, right? Patterns are the results, not the cause, right? So this goes to this bigger thing that people say that humans don't change, and people on the whole will tend to follow the same patterns of behavior over and over again, and therefore you will tend to see those patterns of behavior play out in price over and over again. So I should be able to go and look at a past crisis and overlay it on the current chart, and they'll match up really well. And what these people don't understand is that you can actually do that and fit things together really, really well. So like something that I've noticed was there's people were saying, this is just like the 2008 crisis. And so they started overlaying the 2008 crisis over the chart, right? And then the markets went up for 3 months, which was not on their chart. They were saying we had already had kind of come up, and now we were likely to turn down and move down again, right? Well, a month later, they're still saying that we're matching the chart up, and it's like a 96% match and things like that. Well, because you moved the chart, you're not anchoring it at the same prices anymore because it didn't match up very well. So you adjusted it so that it still looks good. Like that's what people are doing. Patterns are results, not causes. So the idea that humans tend to behave in a consistent way over the certainly on short time frames, that is not true. On short time frames, the market is very statistically efficient, and the market microstructure of the market overwhelms what people think the way people behave is. Although a lot of the things that people believe about technical analysis really contradict what we know about the way people behave. For instance, we know that people are much more fearful of losses than on missing out on gains. And so the kind of technical analysis signals that you should be looking for on the short side should be different from the long side. But technical analysis, people say that it should apply to all time frames and all directions and everything symmetrical, et cetera, right? So but there are things, if you do a certain thing to the market, if you come in and you execute an order of a certain size, in certain liquidity conditions, I can tell you what it's going to look like. And it's going to look like that basically every time. It's going to look like that basically every time. And then you'll be able to see it on the chart and you'll see the pattern. So does the pattern exist? Yes. It's just that the pattern doesn't tell you what's going to happen next, right? If I know something, I can predict that you're going to see the pattern in the future. But otherwise, I can't tell you what it's going to look like. Your reaction to trading is using the present market generated data to make money. Well, unless you're doing market making, right? So the only way, so think about it. Okay, this is the Gary Norton approach. And I haven't taken his new course, and I don't want to like reveal everything that was in his old course that I never took, but that I'm quite familiar with because people just share it with me. And if we can only use current market data, it means like the current price, right? How do you do a comparison? From a programmatic perspective, you cannot do a comparison if you only have one data series, right? And in order to do a comparison on one data series, I have to compare the current data point to the past data points. Period. I can only use the current data point. I need other data series. So I can look at correlated instruments and I can see the differences in the correlated instruments and I can make decisions based on that. That is called market making. That is called market making. But to be honest with you, Lafta, from what you've told me about the trades that you take and stuff, I don't think that that's what you're doing. The way the treasuries are moving here today is very interesting. They did make a new low, but not by very much, and they're already bouncing again. But the S&P 500 is doing okay. In fact, the first 15 minutes here, we got a 20-point run. It's looking pretty good over there in ES. Might be one of those days where we get like a little bit of a run in the morning and then it kind of struggles the rest of the day. It's been doing that a lot. I do kind of suspect, so reading that thing from Brannigan Barrett earlier, I think is a good point here. I do not believe that the Federal Reserve is going to raise interest rates 100 basis points. So that 30% of the market it's priced in 30%. That is going to be a relief to some, so that could lead to some relief. And we're at least past the front loading phase, I think. So I think there is a good chance that even though the Federal Reserve will not be dovish, and they will say we're going to leave interest rates high for a long time, and we're going to beat inflation. I do think that you get a situation where the markets will be a little bit relieved. So if we have a rally this week, that's really going to screw up their charts, right? That's really good. You know, here's the other thing that kills traders. This is what screws people up more than anything else. Is when you have success from a strategy that doesn't work. People are really, really good at that, selection bias. I'm saying a lot today. I'm sorry. Guess my mind's not 100% this morning. People are really good at selection bias. So if you have a period where you do well, your brain will always remember that period where you did well, and it will ignore everything else of the time periods where you didn't do well, right? It's really good at saying, well, I did good most of the time, and then that one time where I blew my account, that was just me being too greedy and my psychology getting in the way, right? I've never, ever spoken to a technical analysis trader that said, oh, well, the reason that I'm not profitable yet is because the technical analysis strategy that I'm using doesn't work. They never say that. Have you ever heard that before? No, it's always, I'm not good enough at the strategy yet. I don't understand it well enough yet, or my psychology is getting in the way. It works, but I'm self-subterfuging, or whatever they call it, right? So what they always say, they never sit down and say, oh, well, actually, I did do the strategy as best as I could, and it turns out that the strategy just has fat tails that I wasn't able to account for, and the strategy isn't profitable, right? And when somebody has had a little bit of success, right? There's nothing you can say to them to convince them that it doesn't work. There's nothing you can say. The whole, I mean, I think that it has something to do with the type of person, because to be in trading and hear that, okay, like 95% of traders fail and to still try it, you have to have a lot of faith in yourself to go into it under those circumstances, right? You have to have a little bit of an ability to um be a little Kanye West about it, right? To ignore reality and be successful anyways, right? So these guys, there's nothing you can tell them that's going to convince them until they've lost so much money that it's like, they have to give up. It's other people's psychology that messes with my psychology in trading. Well, like here's the thing. Okay, here's what pisses me off about it. It really it makes me mad. Is that the psychology is really important. Okay, the psychology doesn't do a thing for you unless you already have a working strategy. So let's just assume. Okay, I don't think that what I do is proven strategy. What I do is we have a lot of empirical information that is proven about how the market functions. And we have created our strategy around those ideas. And over the last 9 months, I've had a good deal of success with it. Okay. But I don't have 5 years worth of all of these other kind of metrics that we're saying that you'd want to look at. Okay. But let's just assume that it is proven. Okay. How I trade is very different from other people, right? Because I have to come in, I have to be able to come in here and do a couple of things that are really difficult, right? One of the things I have to do that is really difficult is to be able to correctly read the current market conditions, because the robots are making it as hard as possible for you to see what's really going on, and you'll have a tendency to want to see what you want to see rather than what is really there, and to correctly interpret the liquidity conditions, right? You also have to be able to understand the informational data that's coming into you from like a news squawk and so forth, to be like, okay, here's a piece of information. These are the number of people that are going to be changing their expectation. This is the amount of volume that we can see on it. And it's really easy to get overly excited and think that something is a much bigger deal than it actually is. You notice I do that all the time, right? So what it comes down to is that what you're trying to do from a mental perspective is very difficult and requires um, a lot of focus. So the psychology becomes, how can I perform my best, right? How can I have myself into the place where I can see things accurately all the time, right? All of this stuff about like, well, you self subterfuge and things like that, that all sounds to me like you're taking on too much risk and you're trying to make excuses for a strategy that encourages you to take on excessive risk, right? So the psychology part of it is different, but the whole point that I'm making is that if you don't have a strategy that really works, the effort that you're putting into to be able to perform that strategy at its very best is useless, because you're putting it into performing something that doesn't work, right? Meanwhile, there's all of this work that you could be doing to correctly understand the news that you're getting and to understand the fundamentals and so forth, which is very difficult to learn and requires a lot of experience to figure out, and know that when X thing happens, here's how the market's going to react. Like what I said about the Federal Reserve meeting on Wednesday, that's a really advanced take on it. That the 30% predicting 100 basis point hike is probably a good reason why we could actually see markets rally on the FOMC day, because they're likely to do the 75 basis point hike, right? That's like a really advanced take. It'd take a lot of knowledge of the market and experience to be able to make that kind of a call, right? And people are wasting all of their time trying to practice how to maintain their composure from watching a random line, which is just a complete waste of time. It's a random line. It doesn't matter how good, it doesn't matter how self-secure you are. It doesn't matter if you've overcome all of your undermining beliefs and all of these sorts of things. It's still a random line. It's still a random line. And it doesn't matter what you do, it will still be random. Right? It's the psychology is useless if you don't have an actual edge. They were talking about that on Reddit yesterday too. There's actually been a few threads on Reddit that have been okay. Trash talking on the basketball court can affect your game in a similar example. Yeah. Well, and the really clever traders, if they're going to execute a block trade, they're pretty good at like. I mean, I realized this one early on, but they're really good at like doing something to discourage anybody from trading it their way, right? That's why, like, if I'm in a trade, and I see things that are really disappointing, but like I'm still break even, and I still really believe in my thesis, I like to stick with it, because it's like, well, they did something to discourage me, but they didn't actually push it. They didn't actually put any volume behind it, right? So it wasn't something that actually had a real impact on the market. It was just scaring people. Yeah, they definitely do that. You suck in trading Reddit arguments. It always comes in on Reddit though. It always comes down to that almost everybody that posts on Reddit believes in technical analysis. What are you going to do? You can't have a real argument, right? If you have information that's backed by decades of empirical research, and their argument is backed by something they read in a book, you know, that may or may not be true and doesn't have research behind it, like, where do you think that argument is going to go? Right? Because really, that point, the argument is really the argument is you should base your trading on empirical data, and the amount of data that you need is quite large. Quite large. ES is still rising. Yeah, it's looking really good. Although, like, we're still just like retracing the overnight, so I'm not. Granted, we're down here, right? Like when we started this, we were almost at 3850. Okay, so a move back to 3900 would be a pretty decent move for the S&P 500. But that's what it looks like they're going to have to do to close the gap. So I don't think that a move that far should be surprising to us at all. But let's just note that within the range that we've been trading, that a 20, 30 point move is not really all that significant in the larger scheme of things. Normally it would be, but right now that could just be a pullback, could just be the regular volatility. I do think that we're going to see profit taking this week. So profit taking, I think, would mean like shorts taking profits, right? You're not excited about this move? Well, I'm not excited about the S&P 500. Like in reality, we could have taken a long in the treasury at the beginning of the session, and then sometime just a little bit before the S&P 500 opened, we could have taken a short. But what did we really have going for us that would have told us to take either of those trades? Don't think that we have anything strong enough, especially for it to go both ways like that. Because nothing came out to tell us it was going to go the other way, right? In fact, that it basically just came back to the price that it was before that initial up move and is just kind of chilling there. It really suggests to me that the treasury market is just not that active today. I would normally expect to say, um, we get really big trades before FOMC and that you'll get strong trends in the treasuries that are indicative of how the Federal Reserve is going to go. That's not what we're seeing today, right? That's not the flow that we're seeing today. Maybe that's just because Europe is gone. But Biden said the pandemic is over. Biden said a lot of interesting things yesterday, didn't he? So here's one for you. Excuse me. He said that U.S. troops would defend Taiwan if China invaded. That's like what, the third time he's said that? And then immediately afterwards, the State Department was like, our policy hasn't changed. Our policy hasn't changed. They're so afraid of the Chinese. But like, how many times have they corrected him on that? And he keeps saying it. I don't know. I don't know, guys. What's that one about? Is he just not remember? Is he just too old? Or is he not agree with them? Or I don't know. Inflation hasn't peaked our inflation. I don't know if I agree with that, Lafta. So okay, so here's an interesting. Let's look at something here. So I want to look at CPI versus S&P 500 past 100 years. If I can go back that far. Okay, let's try this one. No, not what we want. Okay, here's consumer price index, just a really big chart of consumer price index. We'll just go to the CPI chart for Fred. Okay. No, wait, that's not what we want. Let's just do an inflation chart. Sure. Okay. Cool. Can I go back further? Use the NASDAQ? I want like a 50-year. Maybe if we do Dow Jones industrial chart. Okay, perfect. So I think I should be able to show this to you with this data. Okay. So We had a peak in inflation in 1974. Okay, so here's 1974, kind of a little bit of a pullback. And then 1980, we had a peak, right? So 1980, well, maybe that was 1980. Okay, right about there. Okay. So what I think you're going to see, generally speaking, is that when inflation peaks, you will see the index peak. So let's see if I can do effective federal funds effective rate. Does this one go back far enough? It does. Okay. So here's the thing. Okay, this is only by year. 1980 and then 1981 it changed, right? But look, 1980 and rates were still high until well into that recession. And then towards the end of that recession, they came off. So the rates didn't come off until 1983, which is when we're all the way down here, right? So the argument that I'm making, and I pulled this from a research that I had seen, peak inflation is a better indicator of when the market will bottom than the federal funds rate is. So what everybody has been doing is they've been saying, the Fed is going to pivot. They're going to start easing again, and then you want to buy all of the things because they'll have to inject tons of money into the economy again, right? But the history actually says that once peak inflation has come, that's when the market bottoms, right? Well, so let's pull up another chart. Let's go to Forex Factory. And I'm going to pull up like last week. Okay. And then we look at Tuesday. We had CPI, core CPI. Okay, so if we look at core CPI, there was some months where we had spot 8, right? And then it came back very quickly, and now it's kind of been chilling out between spot 2, spot 3, and spot 6, right? So have we had a peak in inflation? Yes. It could spike again. That's kind of the problem. The problem is it could spike again. But otherwise, we have a peak. And when was that? What months was those? May 2021, July 2021. Okay. December 2021. And there's this one, July. And if we come over to daily ES, what was our lows this year? Our low this year was June. Okay, so our lows this year was June, corresponds with this one right here, right? So it looks like they don't match up month by month per se or day by day, but it does look like peaks in inflation do well predict bottoms in the market. The reason why I say that is because, like it was in the 1980s, I would not expect them to just like completely turn around and be like, okay, interest rates are 0 again. Probably not going to happen. I could see them saying, okay, we've had a recession, we'll bring it back to 2%. But I don't think you're going to get, because oh man, this one made line laughed so much. So I saw this guy on TikTok. He's like, well, this is a new account for me. I haven't really been on TikTok, but you can go and see my YouTube. And he was talking about like Federal Reserve policy. So I was interested. I go to his YouTube channel, and he was quite popular. He had over 100,000 subscribers. I was quite surprised. I was like, okay, that's a pretty big person. I've never heard of them before, right? And what had he been pushing 2 weeks ago? That the Fed has pivoted. The Fed has pivoted. The greatest opportunity for wealth generation in your life is about to come out this winter, and you want to buy all of the things and just go full bore with it, etc., etc., etc. And then what happened? Last Tuesday's CPI happens. And it was so funny to me. It was like, wow, this guy got it dead wrong. And how many people really did? I mean, a lot of people bought into the Fed is pivoting narrative, right? Even though everything the Fed said was contrary to that, I really don't know where that whole idea came from. I think it was all a bunch of nonsense. And I did at the time. I remember thinking, I wouldn't get too hasty. That doesn't mean that I'm making some like contrary prediction. I can just tell you that that investment thesis is probably not a very good one, right? Probably not a very good one. Kind of makes me mad, actually, to think about it, that there are so many influencers out there kind of making such a speculative call. Like, that's one thing for your own trading, but I don't think that you should go and make a video based on a speculation. You know what I mean? But like that's the thing is that with the way that this really sucks. The way that social media is going is the wrong direction, guys. TikTok is cool, okay? The algorithm I think understands what you want to see better than you do to some extent. But there's another side to it, which is that people will start to optimize their content to what the audience wants and they'll over optimize it. So it turns into a situation where, hey, there's a lot of content that Seth would watch, but people don't make it because that doesn't get you the most views, right? And so it centralizes things. It basically it says, okay, you got e-girls and sensationalists and already established influencers right here, and then everybody else they make nothing. Nobody cares, right? Whereas before you allow a broader range of content, these guys aren't so high and these guys get a little bit more of it. You get a better variety of content. It's easier for you to find the content that you want, right? Well, what's happening is YouTube used to be like that, and niches work and so forth, and you could build an audience and people would follow you for you and the content that you make because they know that you make good content. And YouTube is trending, and Facebook in particular is trending towards the TikTok style of doing things, where we just look at each individual piece of content in isolation and whether it created the engagement or not. And that is very detrimental to a wide range of content. And in particular, it's detrimental to more informative content, right? It's only the big sensational stuff that you can say in like 10 seconds and really grabs people's attention. And it's manipulative in my opinion, right? I don't know how to overcome this, but it seems to me like I sometimes I'm like, you're a little too egotistical, Seth, but then I see things like this and I'm like, yeah, but he was wrong. He was wrong. How is it that this guy that's wrong has 100,000 subscribers? And if I had 100,000 subscribers, I could have told something much more nuanced and useful to them that would have helped them. Instead, they lost money on a trade thesis that was total bunk. Frustrates me. Many Bitcoin. I don't know how. Let's just kind of see how bad things are in Puerto Rico. I think the reality is that those areas kind of suck to live in, and that really it's not. There's not a good reason for people to live there. I don't know. Am I wrong? because it keeps happening over in those countries, Haiti and Puerto Rico, that there's a big storm and then we need tons of humanitarian aid. You would think that eventually people, maybe it's not as bad as the news makes it out to be, because you would think that people would not put up with that after like the second or third time. The Treasury's still very quiet. Like it's moved, but it's never been having enough level 2 information coming through to like really catch my attention and be like, oh, okay, something's going on. Been more interested in yapping. And let's see here, I wasn't catching the latest Twitter headline, but not too much. Even Twitter is kind of quiet today. So tell me, are you guys planning on buying a video card this year? Because I thought, oh, when the 40 series comes out, I can try and snag one of those. Kind of thinking no. I'm kind of thinking still to wait. Like I'm starting to think maybe next spring. Maybe next spring will be the time. I guess it depends. Like if Bitcoin collapsed to new lows tomorrow, maybe that would be different. 20,000 was the previous generation's high in Bitcoin. So let's say that we drop below 10K. Let's say that there's a 50% drawdown below that. At that point, the technical chartists really start to question themselves in Bitcoin, right? Yeah, ES is still going. I don't see any reason for ES to stop while we're here, at least. I guess the problem there for trade would be like, what price do you take? But did I not say at the beginning that like, well, I think it's kind of both ways, because there are some problems in ES this week with their flows. Like there probably is some short. This could just be a temporary pullback, but felt like we did kind of suggest that we would see pullbacks in equities today, didn't we? It's a complicated thing. I didn't take a trade off of it, so I guess can't really say that I made any kind of a call. I'm surprised they have more of a desire to take a trade today, but yeah. I guess because it was already down big today, that was kind of made me less interested in it. No. See, here's the exact same thing that I was just talking about. Heidi Brybones says, here's an idea. Instead of remaking old shows and having people get hurt by the new interpretation, then maybe actually just create new content. I don't know. Too hard? Well, the problem with that is that the way that marketing and everything works, name recognition comes above all else. You have name recognition, then people stick around and watch. And if you don't have the name recognition, then they go somewhere else. You'd think that you would think that having individual pieces of content judged on their own merits, that should mean that eventually you will make a good piece of content and it will go viral. Yes, that's true. You will have at least one piece of content go viral, but it doesn't help you establish a consistent audience. You have to consistently make that video that catches everybody's attention over and over and over and over again, which is very difficult to do and unlikely for you to do. It's not, you by chance, you'll probably catch one video that goes viral. But if that doesn't help you, build a subscriber base to do well on in the future, it doesn't help you at all, right? And so it's the same thing with movies. is like the name recognition gets you more press and is more likely to get people to go. And so the way that we've basically kind of done marketing and the way that the algorithms work and the way that people's attention work right now basically makes it more profitable to reboot something. Makes it more profitable to reboot something and change the story the way that you want rather than to make your own property. Are you getting an echo? That shouldn't be. No. That would be weird if you were getting an echo. Let's see here. No, if I listen to the stream myself, I don't hear that. It actually sounds really good. I'm surprised. I forgot how good the mic sounds. Sometimes I don't like the dynamic mic. I don't have a good enough amp on it. I need a better amp on it. Then it would really, really sound always good and consistent. By the way, today's biggest loser, wheat, down 4%. That's not a very strong vote of confidence in the global economy, is it? So you know what? I haven't even pulled up like the Apple order flow. Should we pull that up? Let's pull that up. It sure does seem though like less eyes on the market today. Trying to think about what we should put for today's title, but Fed Week starts with a sleeper. I don't know. That's probably not. I'm saying I don't know too much again. Why am I doing that? I'm not. I don't feel like a lack of self-confidence or anything. I am actually feel quite confident in that I don't know anything right now. Nobody wants to hear that. No, I feel pretty confident that this is not the best action to be trading in. For treasury futures at least. You certainly could have made some money long on ES. Though I'd say pretty steep pullbacks on that. Are people still losing their jobs? I don't know about that one. I haven't heard of anything about it. Biden should officially end restrictions soon. Maybe I'm disconnected from that because I live in Utah, because to me it's been over for like 2 years already. To me, it's been over for a long, long time. I'm coming back to school, and now, the kids are coming back to school, and now I'm dealing with all of the problems that the changes in culture are creating for my kids. That's what my life is. That's how I see the world right now. The world has changed in the last 2 years, and I don't think that people have realized how significantly it has changed and how detrimental those changes are to people. Like, this whole like lock people down and then people don't really get together. People don't really see each other face to face has been very, very bad for society. Like I gave an example the other day, I'll give it again. When you have young men, you want those young men to graduate from school and then go into a job and learn being in a job. If they're not, or they're at a job where they're at home the whole time, I think that there is a lot of culture and stuff that you pick up as a man that you're not getting, that you're not getting. To be honest, I feel like that in society in general is not giving men enough space to be men and to learn those things that you can only learn from other men. It's really sorry girls, but you don't have that same experience, so it's not you can't teach those things to them. And it's like the whole elephant thing. You ever hear that story that like they had these male elephants and they were terrorizing the park. So they introduced some older male elephants and it chilled the younger male elephants down and then they stopped being destructive. It's like that, man. It's the way it works is because testosterone makes you aggressive and you have to learn how to channel it into a productive use and an intelligent use of risk, right? A lot of people aren't getting that, aren't being taught that now because that's where you learn a lot of that is when like your first job, your first office job. If you're not getting it, where are they getting it from? Call of Duty? Well, I think that we need to have more in-person opportunities to do things with people. And do things with people that are in your local area. That's another problem is that people don't really like to talk to people that live next door to them. You should be talking to the people that live next door to you. And like, especially if you live in like a town home or a apartment complex, you don't want to talk to the people that live close to you. You don't want to know them, you know? People avoid it. Uh, so I don't know how we fix that, but Ted Cruz is the new. Why are you bringing up all of those political things? I don't know if that one's that interesting to me right now, to be honest. Yeah. So like, here's the thing. Does that move the needle for the midterms? Does that move the needle? I really don't think it does. Economics does. Inflation still being high does. I think that inflation report last week, I wouldn't say that it's like impossible for them to overcome, but it really, really hurts the Biden campaign, right? And if you get a similarly high reading in October or November, or October rather, let's say, then they're really screwed, right? Then they're really screwed. But now, and another thing is that the Republicans are pushing through. Well, Lindsey Graham rather is pushing through an abortion ban, and abortion has been the best issue for Democrats in getting their people out to vote. So, why would you go and do that? Why would you go and do that, Lindsey? So dumb. So that's helping Democrats. The illegal immigration thing is interesting from some perspective, and I'm interested to see where that goes, but that sounds to me more like a 2024 issue rather than a midterm election issue, right? I don't think that anybody's going to change their midterm vote because they all know that it's not going to change until Biden is out, right? We all know that it can get there's no level. This is what scares me about the immigration issue is there's no level of craziness that would cause Joe Biden to reverse policy on immigration. It could there's no level of craziness that would get him to change it. Do you think so? So we all know that it's gonna just gonna be like this until 2023. Oil's getting a decent bid here. But I mean, they've been quite low today. Like we said earlier, they got hit pretty hard in the overnight session. Treasuries still kind of look so when I look at the 30-year, it looks like maybe the treasuries are gonna pop back up, but I think that the bigger thing here today is that the flattener is coming through. So if we move back up, it could just be an opportunity for more shorts to go short the 5. Meanwhile, when I look at my instrument board, the only positive, the only instrument I see that is up today is soybeans. I mean, most of them are only down a tiny bit. And like ES, it's been up. Like that's the funny thing is like ES has been up, but that's because they were down really big overnight, right? It's just a retracement of the overnight move. So quiet day, overall pretty negative day, but a pullback. So maybe some hope. Maybe some hope. I want to talk about how technical analysis doesn't work again, but I think we beat that horse enough today, yeah. Nick Timmerose, Jay Powell ditched his original Jackson Hole speech last month after markets turned excessively optimistic about an inflation turnaround and Fed pivot. The one he delivered was shorter and nuance free. Inside the single mandate central bank by the Wall Street Journal's Nick Timmerose. Nick Timmerose. Timmerose. I think that you got to get that ear in there. Timmerose. There you go. So here's somebody who's just talking about the same thing, Lafta. Jack Pro Sebiak, he's a kind of, I don't know if the Donald people like him anymore, but a Trump supporter. He says trade in immigration 4 times. Trade in immigration. Well, I'm not so sure that those are the policies that people are most interested in right now. For the midterm elections, at least. What are you going to do on those things if you get in office? Hmm. Maybe I'm wrong. To me, the biggest issue is government's spending too much. And we're going to have to pay for it. It's going to suck. But maybe not everybody knows that. The Hill reports the movement to ban books is growing, report finds. Ban books, ban YouTube videos. You know what I want to know? Can we talk about? Here's a question for you guys. Just like conspiracy. I'm gonna be careful here, okay? Mr. Tate, who got banned. I don't know. There's some things I don't like about that guy, but should he have been banned? I don't know. Like I don't look at all his content, so I'm not gonna make a call on whether or not he should have been banned. But what I find weird is that he got banned from everything. Right? Even people that like shouldn't be banning. So like, how does that happen? Is that they have like some group? Is it somebody calls the code red and then everybody bans him at the same time? Does the government do it? I like because at this point I'm starting to wonder like, does the government get like we know that the government has been involved in these sorts of things for COVID, pushing certain COVID storylines, right? Why wouldn't they be able to come in and say, hey, well, we think that you should ban this guy now, right? But why would like Uber ban him, right? This makes zero sense at all. Who makes the call? Who's the one that says, okay, you're canceled? All of the tech companies all at once cancel you. How does that work? They have a secret Discord room where they coordinate banning you? There's got to be some sort of communication somewhere. It's coordinated, and we've seen it many, many times. Everybody bans the person at the same time. Just wondering. It's not relevant, but I'm just telling you what's on my mind. Trying to kill time. Waiting to see if maybe something significant happens here in the treasuries before we go today. Well, one of the things is that I would also be looking at today to be kind of as an indication of how the rest of the week is going to go. But because of the whole Queen's funeral today and everything, I don't know if today's action is really going to matter too much. Hmm. What's this? Everything is reversed from when Elizabeth became queen because instead of the king needing to be schooled by his prime minister, it seems very much like it's the other way around. Okay, Forex Live is retweeting this story from Nick Timoros. Um, I don't know if what I've heard from that headline really moves me because that's kind of what I thought it was anyways, was that he was coming out because all of these people were saying that the Federal Reserve is going to pivot. He saw that as okay, I got to come out and dash those hopes, right? Hmm. Getting a little bit more on Twitter here. And we are getting a little bit of little bit of autocorrelation in the of order flow in the 10-year to the buy side. I wouldn't say that it's super strong, but it's the best that they've gotten so far today. Maybe they continue to rally back up to the highs from here. I could kind of wonder, like, the move up and the move back down. I wasn't on very much volume, but from a range perspective, you really kind of have to wonder if there was some news for those. So we're okay. That one's an interesting one, Tobias. Worst year in U.S. history for the 60/40 portfolio. So here's what I was. Okay, remember the beginning of this inflation deal, right? And I said, "Yep, inflation is going to be coming." All of the metrics that we have say that inflation is going to come, and then once you get that kind of inflation, it's very, very difficult to make it go back away, right? So I knew the inflation was coming. And I said, okay, well, so you want to be long interest rates, which probably means you want to be long stocks that do well when interest rates are high, like banks, right? And you want to be long maybe gold, right? Well, what has happened since then? Have banks performed okay relative to the rest of the market? I guess, but they still got hammered like everybody else. And gold didn't act as a hedge against inflation at all. Not at all, at all. Basically, like gold was a hedge against inflation before it happened, but then as soon as the inflation started coming in, gold got hit harder than anything else. So, what is the reality here is that it doesn't matter what you do, whether you're in a 60/40 portfolio or what. If you were long the market, you lost money. There's nowhere to hide. There's nowhere to hide. We went from there is no other alternative to everything loses. Right? That's the world we live in. Everything loses. Energy, well, but even, okay, you definitely could have made money on oil, but 80, 80 again is about where things were before. So the recent decline that we've seen in commodities kind of means that commodities wasn't really a safe place either. It was for a while, but if you're still in it, right? If you're still in it, you're probably a little unhappy. Hmm. I mean, if you look at gold, it always follows the ES in crisis like '08 and all. Yeah. Gold really is like a unique one, right? because there is some fundamental demand for it, and that has certain large effects. But then it also is supposed to be a hedge against inflation, but it's a speculative hedge against inflation. So when people don't want to speculate, that goes away, right? So if we were in a market, like if we were still in a market where the inflation is high and the markets are roaring higher still too, then maybe gold would be a hedge. It's weird that it's always preached as a safe haven. Yeah. I that's why I always just ignore the gold bugs. Like I think the worst one is Peter Schiff, man. I why does anybody listen to him anymore? They're talking about a guy that's basically been dead wrong about every major call for the last 10 years, and he still gets airtime. Like, why does he get airtime? I'm jealous of Peter Schiff, right? Because I told people, like, gold doesn't seem to be doing very well in this environment. Look, I don't come in and I'm like, I know everything. This is what you need to do to go and get risk. The greatest opportunity of your lifetime is coming, and all you have to do is listen to me all the time. No, I don't do that. I just say, look, it's not performing very well right now. These guys, that's the ones. The one that's wrong is the one that everybody listens to. I don't get it. Yeah, no, there's Kramer. There's Kramer. He's been doing really terrible in this market. He's been doing really terrible in this market. You know what? I think that Kramer doesn't understand this market as well, because it's more a macro-driven environment, and I don't think that that's necessarily his specialty, right? I think that's why Kramer's been making such terrible calls lately. But like the reality is that he makes more calls than any normal person should, right? Because he's on TV and he's driven to. It doesn't mean that if he went back to being an asset manager that he couldn't still be a good asset manager. Actually, I think he could. And I think that there's a lot of really good stuff that you can learn from Kramer. But the whole thing is that the nature of the job basically pushes you to doing stuff that is detrimental to your audience, right? I keep seeing that over and over again, is like the things that I know I could do that would like instantly get me more subscribers in the short term are also things that would hurt my subscribers, right? Drives me crazy that it's like that. Oh, Peter. You know what's you know what's the new one that's kind of driving me crazy? You guys aren't going to like this one. Okay, the Ray Dalio book about how empires fall and stuff like that. I think it's total bullshit. So the world is going to change. The world is going to change for sure, but it's not going to be like the fall of the Roman Empire. Okay, we live in such an interconnected world now that it would really take a significant disaster to turn that around and take us back into the Stone Age or something like that, right? Most of these guys are all the same. Well, Ray Dalio, he's an asset manager. He's made big money, but listen, I hope that the next generation of guys are better on this, because the reality is, like, they made money from certain things, but like they have a whole organization behind them. So there's going to be things that they're wrong about it and they don't really know it, you know? And they're not in a position to know that what they don't know, because everybody just kisses the ground that they walk on. But um the adage that history repeats itself and that markets repeat themselves is too simplistic to making an analysis like that and to trade off of, essentially. Yeah, making money equals good opinions. Yeah. So you won't be like the fall of Rome. Now, could US influence abroad diminish significantly? Oh yeah. I think there's some real I mean, the dollar continues to be strong. One. So first, that's the first thing, is that when things are going down, dollar continues to be the best place. and like crazy. So like the dollar index at 110 is like crazy, right? That's the first thing. The second thing is that while we have been very concerned about China, and I was concerned about China back in 2016 when Trump made it a campaign issue, and I think that while I really do still like trying to equalize trade with China, okay, and I think that the trade war thing was a high risk strategy that I was willing to go into. I am not as concerned about China as I was 4 years ago. Um, because what I'm realizing now is that China has its own set of problems that are going to prevent it from really taking over the way that we thought, right? I don't like that their influence is growing. I don't like that I feel like censorship is increasing and that governments are taking advantage of companies to censor people for them, right? But China's got a aging population. The way that their government works is basically encouraged their malinvestment, right? The Communist Party has encouraged malinvestment, and now they're really feeling it in the form of this real estate crisis that they're having. Like they have problems that I think really prevent them from becoming like the United States has been for the last 50 to 100 years, right? So I'm not so worried about that. And that means that while the nature of finance and stuff as it regards the dollar might change, you should be more concerned by at India at some point, but not in the near future. You're probably right, Tobias. I really like India. I don't know what's going on with their current leadership, but whatever. Hopefully they come around. I'm sure that they will. I like the people, and I think that in the end they'll do the right thing. So yeah, this kind of like the world is going to change for sure. The exact nature of it, I'm not so sure, but I don't think that the correct comparison is the Roman Empire. So like, here's the thing: is that if we have a debt crisis of some sort, I mean, we've been worried about it since 2008. If the sovereign debt crisis ever happens, everybody will be screwed. And the United States will probably still be in the best position. Like that's the thing that's so funny about it is as bad as we've been, the up until now, United States has actually been the more responsible one still. And I hope that we can kind of like we get a Republican in after Joe Biden and we bring things back down. I can only hope bring the budget gap down at the very least. Okay, but they're all gonna it'll be everybody, and they'll just have to make an agreement. Okay, we'll all forgive each other's debts. So one country will end up being debt free. It'll be the U.S. or something. I don't know how it will work, but it's not going to be going back to the Stone Age. It's going to be a crisis that we're all going to have to deal with, and it will be weird. It'll be weird, and it will be uncertain times, and it'll be difficult to trade. I don't think that it will be like a replay of the Roman Empire. But you have the dollar, guys. Don't underestimate. It's true. The dollar is so strong. Watching the dollar in 2021 and 2022 should really make you think twice next time somebody starts bashing the dollar, right? Like it's just the way that it is. That the people that get on social media and yap a lot about the dollar, it's not that they're wrong. It's just that anybody that is going to be focused on that at this time is politically motivated and isn't really going to understand markets. They're not telling you the thing that matters at the moment, right? When does the weakening dollar matter? I don't know, but it's not right now because we're above 110. Maybe if we have a really big decline in the dollar and it goes to like 70, then I'm concerned. But yes, the sovereign debt crisis would be a dumpster fire. I mean, the reason it would be a dumpster fire is that countries of the world would have to recalibrate a lot. I really think that, like many states do this, where they have a constitutional amendment that requires that they have a balanced budget, for instance. I think this is a good idea. A government should be able to take out debt, yes, but they need to keep their budget balanced. So when the budget is imbalanced is when you lead to problems. You borrow too much growth against the future, and you crush the people in the future. That's what happens. Ugh. Scene after Hurricane Fiona battered Puerto Rico, and it shows his house in the middle of a river. Oh, that's awful looking. Wall Street Journal being retweeted by Nassim Nicholas Taleb, heard on the street fund manager Mark Spitznagel, who earned a fortune when stocks cratered in 2008 and 2020, has some surprising advice for investors. I want to read that. What's his surprising advice? Spetznagel thinks the Fed will blink soon on rate increases, but he isn't explicitly betting on either outcome, but would likely find himself in the headlines again if the more dire ones come true. The last time there was a contraction in the U.S. economy, his firm, Universa Investments, earned an astounding 4,000% return in a matter of weeks. The time before that, during the financial crisis, he more than doubled clients' money even as the value of stocks was cut in half. In between those two downturns, Universa made $1 billion in a single day during the flash crash. Oof. I'm looking for like the big takeaway, but I don't think it's there, and I don't think I have enough time to read this whole thing. I'm going to read this whole thing. Okay. Individual investors would love to buy the sort of crash protection that Mr. Spitznagel, a protege of Black Swan author Nassim Nicholas Taleb, sells to his sophisticated clients, but they can't, and in their attempts to recreate it and gain some peace of mind, they wind up hurting their returns. Techniques range from chronically wrong attempts to read the economic tea leaves and time the market to the use of products or investments touted as hedges. For example, exchange traded notes that rise in value on down days for the market have become some of the most traded instruments on the US stock exchanges since the pandemic began. The ProShells Ultra Short QQQ, which delivers 3 times the daily inverse return of the tech heavy NASDAQ 100 index, has shined, rising 32% over the last 12 months. But many of its fans fail to grasp how awful it is to own in the long run, having lost 99% of its value since its 2010 inception. Getting the timing slightly wrong during the past year has stung too, with 45 days when the note's price fell by 5% or more and 7 days when it fell by at least 10%. Even the classic 60-40 bond portfolio, meant to smooth out returns in choppy markets, has disappointed this year, with inflation surging, losing about 16% through Friday, nearly as bad as owning the total stock market index fund. Gold, a traditional inflation hedge, has lost 9% this year, and digital gold, Bitcoin, has done far worse, falling 57% through Friday. Risk and reward are traditionally seen as a trade off. A smoother return means settling for a lower one. Mr. Spitznagel's book, Safe Haven Investing for Financial Storms, published a year ago, argues that it needn't be. A leaked copy of his fund's returns over the first decade through mid 2018, which predates the pandemic bonanza, does too. A portfolio with 3.3% in Universa, which uses sophisticated derivatives to profit from extreme market moves, and the rest is in an S&P 500 index fund turned 10,000 into 31,000. One that just owned the index grew to 25,000. Other portfolios with traditional hedges such as gold and treasury bonds did even worse. In an interview last week, Mr. Spitznagel says that individuals can't can't replicate that result. His answer, as the next best thing for the individual investors, is what Warren Buffett would recommend: just buy and hold stocks for the long run. Yeah. That is surprising because Mr. Spitznagel is at heart a pessimist. While his mathematically driven fund constantly rolls over doomsday bets and doesn't rely on short term predictions, He sees the Fed being backed into a corner with long term consequences. The size of its balance sheet and the buildup of the debt of the economy overall leave it with the choice of continually trying to crush inflation, thus pushing the US into a downturn, or else giving up tightening as it did in December of 2018 when it sent stocks back from the brink of a bear market. Yeah. Unless the Fed acts wildly out of character and keeps tightening, inflation will stick around and bonds are no place to hide. A long term bet on stocks, even if a crash lies in the near future, is the way to maximize wealth. Universal's client rely on his fund to feel comfortable staying invested in risky assets, willing to put up with months or years of small steady losses on a small part of their overall portfolio. California's huge public employee pension fund infamously lost patience with Universal's strategy shortly before the pandemic crashed and lost that 4,000% return. Individual investors who can keep their nerve better than a board of bureaucrats have the best chances of navigating future financial storms. The strategy is simple, but it sure isn't easy. Written by Spencer Jacob at thewallstreetjournal.com. Well, that didn't really tell me what I wanted to know. I wanted to know what he thought was going to happen next, but apparently he is not really too confident on what's going to happen next, other than that we're screwed. Isn't that just the perfect summary of this market? Everybody has a different reason, but everybody seems to think that we're screwed. Well, that seems like maybe a reason to be optimistic, because I can remember after 2008 and many periods since then, people feeling like that, and then we always moved higher, so we'll see. Listen, a 3.5% interest rate ain't so bad. It ain't so bad. Okay, if we get the 3.4%, let's say we get to 4%, and then we could just leave it there for that would be lovely. I think that would be lovely. We could do it. They don't necessarily have to bring him back down. Uh-oh, what is he saying? Oh, who? Yes, Biden's yes, which was set up by the host and straightened out by White House, doesn't mean the U.S. is determined to send troops to protect Taiwan. As the mainland's power increasing, the U.S. will be less and less likely to do so. Taiwan's authorities should not be muddled. Ugh. Reading that guy's tweets just make you feel kind of, that was Hu Xixin, the former editor of the Global Times, the Chinese newspaper. Reading his tweets just kind of make me feel icky, you know? Don't worry, we can totally bomb the crap out of Taiwan. The Americans will be too afraid to stop us when the time comes. I can't believe that there's still people out there in this world that they're saying the same sort of stuff in Russia. I can't believe that there are still people out there willing to take that kind of line. Like, dude, they don't want you. The people of Taiwan, they don't want to be a part of you. Why do you want to force them into it? It makes zero sense. Zero sense. You want to go and marry somebody that hates you? Why would you do that? You're supposed to marry them when you love them, and then eventually they hate you, but they're stuck. But you don't want to start out with them hating you. That's a recipe for disaster. I don't think I made a very convincing point there, did I? Nope, I don't think so. I'm glad you found that one funny, D. By the way, I'm going to be sure to try and get the documentation updated this week. But if you download it, you just try the new ones. You'll see what they're about. You have questions, you just ask me here. Let's see here. Yeah, I don't have anything more to say with that one. I think I should just end the stream now. D thought that was funny. That's good enough for me. I think we should just end the stream. Huh? No, we need to give it a name. We give it a name. Fed week starts. Fed week. I don't want to make it seem like, oh, it was so slow. That thing you said, yeah, you know, you know. The funny thing is like my wife is still in the worst parts of having a baby period, right? Because um still keeps her up all night and she doesn't feel like she gets enough sleep, and she's watching them all I mean, I watch them a lot too. I do. I hold them a lot too, but it's a lot. Okay. So she doesn't really have a whole lot of energy to spend on me, you know? but I'll still get that little kiss everywhere. It's like, oh, okay, you do still love me because just I wasn't 100% sure, but that's just me. That has nothing to do with anything she's doing. That's just I just get overly anxious about that stuff, right? But I know I 100% trust her. So even though I 100% trust her, that doesn't make the feeling go away. You know what I mean? Like psychologically, I know that everything's fine, but emotionally, I'm like, she didn't kiss me today. What's wrong? So, but right now everything's going well. Let's hope it stays that way. Give it that title. Don't marry somebody you hate. Don't marry someone you hate, China. Don't marry someone you hate, China. That's what I'm going to put as the title. Let's. It was a thing in the Bible. You could, like there was those situations where you have to marry a rapist or whatever. Like, why would you want to do that? It's a bad idea. It's a bad idea, guys. Don't do it. I'll see you guys tomorrow. Hope that doesn't piss off the CCP here.